Welcome back to the Daily Crypto Deep Dive. Today we're taking a closer look at one of the most fascinating stories in the crypto world right now. Michael Saylor and the latest multi-billion-dollar Bitcoin purchase that his company has made while the rest of the market is panicking. It's a moment that captures the tension in the market perfectly. Fear on one side, conviction on the other, and a single company stepping into the chaos with the type of confidence that almost no one else has. Whether you think Saylor is a visionary or a reckless gambler, the scale of this move demands attention, because it tells us something important about where Bitcoin stands right now, and who still believes in its long-term potential. If you're new to this story, here's the simplest way to frame it. At a time when Bitcoin is sliding, when US spot ETFs are seeing more than $1 billion in outflows, and when traders across the world are tightening risk, strategy, a company built around the belief that Bitcoin is the strongest asset of the 21st century, has just added more than 8,000 Bitcoin to its holdings. Not quietly, not slowly, but in one giant aggressive purchase, financed through a mix of capital raises, debt, and the sheer conviction of a board that has tied its identity to the future of this asset. But to understand the significance of this moment, you have to understand the man behind it. Michael Saylor isn't just a CEO with a strong opinion. He's the most vocal corporate Bitcoin bull on the planet, a man whose strategy has transformed his company from a relatively niche business intelligence software firm into what is effectively a publicly traded Bitcoin holding vehicle. His decision to deploy billions into Bitcoin since 2020 has been praised by some as genius and mocked by others as dangerous. But regardless of what anyone thinks of him personally, his influence on institutional perception of Bitcoin is undeniable. And this latest purchase, right in the middle of a fearful market, reflects something deeper about how he sees the world. Saylor believes that downturns aren't threats, they're gifts. Moments of panic are moments of opportunity, because long-term holders aren't trying to time the bottom. They're trying to accumulate the scarcest monetary asset ever created, at any price that's lower than where they think it will be decades from now. So when the market dips, when the headlines turn negative, when retail starts selling and institutions pull money out of ETFs, that's when he steps forward. Of course, none of this exists in a vacuum. You have to look at the timing. The broader market has been hit hard. Bitcoin has dropped sharply from its highs. The total crypto market has lost around $1 trillion in just over a month. And institutions have reacted the way institutions typically do. They've headed to the exit. Outflows from Bitcoin ETFs have surged, not because these funds suddenly hate Bitcoin, but because in a risk-off environment, managers prefer liquidity, predictability, and the safety of cash until volatility calms down. That's the irony of modern Bitcoin markets. ETFs were supposed to stabilize Bitcoin by bringing in regulated flows, and they have. But as we're seeing now, those flows cut both ways. When sentiment is strong, ETFs amplify the upside. When sentiment weakens, they amplify the downside. And right now, the downside is what the ETF flows are signaling. So the question is, why is Saylor buying when everyone else is selling? Before we answer that, let's take a quick break, and we'll be back in just a moment.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
All right, welcome back. To understand why everyone is selling, you have to go deeper into his worldview. In Saylor's mind, Bitcoin isn't a risk asset. It's a form of digital property that becomes more valuable the longer it survives. Volatility isn't a bug, it's a feature. Drawdowns aren't failures, they're high-leverage opportunities. And the market's fear isn't a reason to step back, It's a reason to step forward. That mindset isn't common in corporate America. Most CEOs are judged quarter by quarter. They answer to shareholders who want predictable results. They don't place massive macro bets that might take a decade to pay off. But Saylor does. And because he does, we need to examine what this latest buy tells us about the future of Bitcoin, not just in price, but in narrative. When strategy accumulates 8,000 coins in one swoop, it sends a signal across the industry. It says, someone with deep pockets, a long-term horizon, and a willingness to stake their entire reputation on this asset still believes that Bitcoin is structurally undervalued. That matters because narratives shape markets more than numbers do. Numbers tell you what happened. Narratives tell you what could happen next. And Saylor is one of the few people who has built a narrative around Bitcoin that institutions pay attention to. But let's pause and be fair. A lot of people believe Saylor's strategy is dangerous. They argue that the company is over-leveraged, too dependent on volatile price moves, and putting shareholder capital at risk. They point to the fact that the stock rises and falls with Bitcoin far more aggressively than the coin itself does. They say that no responsible business should base its entire financial identity around a single asset, especially one as unpredictable as Bitcoin. And they're not wrong to raise those concerns. They're valid. They're important. They're part of the reason why the market is so split on Saylor. Half of the industry sees him as a trailblazer, and the other half sees him as someone gambling with a public company. The truth is somewhere in between, but leaning towards something more interesting. Saylor has changed the definition of what a public company can be. For decades, companies avoided holding volatile assets because of accounting rules, shareholder expectations, and traditional financial culture. Saylor ignored all of that. He found ways to raise debt, issue convertible notes, and spin up creative financing structures that allowed his company to accumulate billions in Bitcoin without collapsing under its own weight. Whether you love him or hate him, that's innovation. Not in technology, but in financial engineering. And here's what makes this latest purchase even more intriguing. He didn't do it during a bull run. He didn't do it when things were euphoric. He didn't do it when Bitcoin was ripping to new highs. He did it during a downturn, one of the worst downturns of the year. When ETF flows were negative, sentiment was collapsing, and many analysts were openly predicting a deeper correction. That timing isn't accidental, it's strategic. Because the biggest contradiction in the Bitcoin market is this: the best time to buy it is when no one wants it. But almost no one acts that way. Retail buys tops. Institutions buy safety. Traders buy momentum. Only a tiny group buys fear. Saylor is in that group, and he's been in that group from the start. His first major Bitcoin purchase came during the COVID panic, when markets were collapsing. His follow-up purchases came during dips, crashes, and consolidation periods that looked dangerous. And every time people questioned him, he doubled down. Not because of stubbornness, though he certainly has that, but because of a worldview built on the idea that Bitcoin is a long-term technological revolution, not a short-term trade. Now, why does this matter to you as a listener? Because the crypto market right now is full of noise. ETF headlines, regulatory drama, political stories, liquidation cascades, and sentiment swings that feel extreme. But when someone like Saylor makes a move like this, it cuts through the noise. It tells you that despite all the chaos, despite all the fear, despite the negative narratives, there are deep-pocketed players who still think we are early, not late. It also raises a more uncomfortable question. What does Saylor know that the average market participant doesn't? The answer isn't insider information. It's discipline. It's conviction. It's the willingness to zoom out to a scale that most people never consider. Because while traders are thinking in days or weeks, Saylor is thinking in decades. He's thinking about energy, demographics, monetary policy, global debt, the digitization of finance, and the long arc of technological adoption. When you think on that scale, Bitcoin at $90,000 isn't expensive. It's irrelevant. What matters is where it could be in 2035, not where it is in 2025. But let's also talk about the mechanics of this purchase, because that's part of the story too. Buying 8,000 Bitcoin isn't like buying 8,000 shares of a stock. It requires coordination, timing, execution, liquidity access, and the ability to move size without spooking the market. Strategy has become one of the most experienced institutions on Earth at doing exactly that. They know how to time OTC desks, they know how to spread orders, they know how to manage custody, and they know how to integrate those holdings into their treasury. They've built an entire corporate infrastructure around it, something almost no other public company has done. And that's why every time they buy more Bitcoin, the market takes notice. Because they're not guessing, they're not experimenting, they're executing a long-running strategy with professional precision. Whether that strategy is wise or foolish is something only time will reveal. But it is, without question, intentional. And that intentionality is what gives this latest purchase its weight. Let's answer a deeper question now. What does this purchase tell us about Bitcoin's place in the world? Because if a public company is willing to commit billions to an asset repeatedly, across multiple market cycles, during both booms and crashes, that tells you something important. Bitcoin is no longer just a speculative plaything. It's becoming an institutional macro asset. The question isn't whether it's volatile. It is. The question is whether it survives. And so far, it has survived everything thrown at it. Regulatory attacks, exchange collapses, mining bans, bull market bubbles, bear market wipeouts, and countless headlines predicting its death. Saylor's bet is that survival equals success. That simply being alive for another decade is enough to take Bitcoin from a highly volatile asset to a globally recognized store of value. That bet has precedent. Gold didn't become gold overnight. It took centuries of surviving wars, collapses, revolutions, and currency failures before it became the foundational asset of the global financial system. Bitcoin is trying to compress that timeline. The fact that a public company is helping it do that is extraordinary. You can disagree with Saylor. You can think he's wrong. You can think he's risking too much. But you cannot deny that his conviction has pushed Bitcoin into the corporate and institutional consciousness in a way that no one else has. Without Saylor, ETFs might not have arrived as quickly. Without Saylor, corporate treasuries wouldn't even be thinking about Bitcoin. Without Saylor, the narrative of digital property wouldn't have the same weight. And that's why this latest buy matters. Not because 8,000 coins will determine the price. They won't. The market is far bigger than that now. It matters because of what it symbolizes. The reminder that there are a few players out there who don't flinch when the market flinches. They stay focused on the long game. They accumulate when others hesitate. They plant their flag deeper when the world gets shaky. And whether you admire that or think it's reckless, it forces you to ask yourself a question. What do you believe about Bitcoin? Not the price, not the chart, not the prediction for next week, but the fundamental question. Does Bitcoin matter? Does it have a place in the future? Will it still be here in 10, 20, 30 years? Because if the answer is yes, then volatility is noise. If the answer is no, then no amount of conviction from Saylor can save it. The market right now is filled with contradictions. Institutional outflows signal caution. Corporate accumulation signals conviction. Traders expect more downside. Long-term holders see opportunity. And somewhere in the middle of all of that, ordinary investors are trying to make sense of it. That's why we do these deep dives. To cut through the noise and focus on the real signals. Michael Saylor is a signal. Not because he's perfect, not because he's always right, but because he commits. And in a market full of hesitation, commitment stands out. The impact of his latest purchase might not be obvious today, but years from now, when people look back on this period, they'll see that in the middle of one of the sharpest short-term drawdowns of the cycle, one of the biggest believers in Bitcoin stepped forward again and said, "I'm not scared, I'm buying." And whether you agree with him or not, that is a moment worth paying attention to. If you enjoyed this deep dive, make sure you're following the show, leave a 5-star rating, and drop your thoughts in the comments. Thank you for listening, and we will see you at the top.